Folks, all right, so a lot of narratives out there circulating on this market these days, but they all kind of involve, the transition. Something's happening and the market's reflecting it, whether you say it's from photons to atoms, elitism to populism, capitalism to socialism, globalization to isolationism. Here's the two I think really matter: new economy to old economy, Wall Street to Main Street. That's what this market, in my mind, reflects. Now, over the course of the past year, you can see it even more, right? Old economy, industrial, that's your number one in the last year. In energy, materials, utilities, that's it. That's that core stuff, right? Those are your winners. Those are your biggest gainers in the last 52 weeks. And of course, there's an old saying on Wall Street: selling begets selling and buying begets selling. So what we see right now in full force these days is the result, right? Equal weight S&P versus the S&P 100 mega cap names. Rarely do you see this much outperformance. The line going down means that equal weight is outperforming the big boys. Not only is this one of the longest moves, look at that bar, how thick it is, but it's also one of the deeper moves. So it's really, but absolutely phenomenal. But of course, the longest streak since the debut of ChatGPT. Of course, back then, AI was the savior, right? It was going to save everything. Think about how innocuous this was. November 30th, we got ChatGPT, but then we started to really look into this thing, right? And it's really amazing, a dialogue format that makes it possible to answer follow-up questions, admit its mistakes, change incorrect premises, reject inappropriate requests. This was a little bit different than all the other versions. Of course, around this time, now, of course, the AI is all about the market and market being vulnerable. Of course, it seemed like possibilities were endless, and it was a good thing back then, but that was in 2022. Now, well, AI has just become simply a destructive force. In fact, the destructive forces in nature have victimized mankind since the beginning of time, right? And there will always be with us. There's no stopping these things from happening. Earthquakes, tsunamis, hurricanes, there's nothing that can be done. Even if you decided that you wanted to go to work in the same car that Fred Flintstone uses, we're going to get them. You're going to have floods and wildfires and those things. They've inflicted hundreds of billions of dollars in economic damages over the years, but the unnatural force is carving out another destructive path. We're talking about AI. As a result, it's eroding investor confidence in the stock market. Look at this. I mean, no industry has been immune. The rapid erosion of companies' capitalization, these industries that are being hammered, and a lot of times it's because they're quote unquote threatened by AI. It's like watching a real life hurricane in real time. Meanwhile, global fund managers still see the AI bubble as the biggest tail risk. It blows my mind. However, I will say this. You see the gray line here? Almost 50% felt that way a few months ago. It's down to 25%. But right now, it feels like they're really closing in. The walls are starting to really close in. And investors are in this mood where they're always kind of bracing for the worst.